You're also watching TVC News at 1. In business now, the Debt Management Office has initiated the subscription process for 2-year and 3-year federal government of Nigeria bonds for December 2023, with an interest rate of 12.29% and 13.29% respectively. This announcement was made in a statement on the Debt Office official website. The subscription period is set to last for 5 days, running from December 4th to December 8th, 2023, which will mature on March 13th, 2024. The DMO outlines the units of subscription as 1,000 naira per unit, subject to a minimum of subscription of 50 or 5,000 and subsequent multiples of 1,000 naira with a maximum subscription limit of 50 million naira. The settlement also specifies the settlement date for both bond offerings as December 13, 2023, with coupon payments scheduled for March 13, June to June 13, and December 3rd, 13 as well. Away from the experts say proper implementation of the Electricity Act 2023 will attract private sector investment into the value chain of the Nigerian electricity supply industry. Partner and finance advisory leader at PricewaterhouseCoopers Western Africa, Mr. Bimbola Banjo, in a one-on-one chat with Business Nigeria, said that the act will foster collaboration among various stakeholders, state government and federal government ministries.
Meant to engender collaboration across various levels. So what you hear say that the act is supposed to engender collaboration between the state governments and the utilities. It's supposed to engender collaboration between the federal and the states regulators, because with the setup of the act, the states will be required to have their own regulators. So because you already have an existing regulator who will transit to becoming the apex regulator for the industry, there will need to be harmonization of responsibilities and roles to ensure that there's no overlap or any duplication of responsibilities. There's also provisions for things like tax incentives, right? And to get tax incentives, it's not something that resides squarely at the doorstep of the Ministry of Power. The Ministry of Power will need to engage with the Ministries of Trade and Investment, as well as the Ministry of Finance, to be able to come up with a structure that can enable things like renewables as feeding tariffs into the Nigerian electricity supply industry.
The Nigerian Port Authority, NPA, has explained how Inters Nigeria Limited waived about $193 million as part of a deliberate and conscious efforts to resolve the stalemate on the pilot stage contract with the federal government. The NPA, in a statement, said the agreement culminated in the waiver of the $193.3 million accumulated interest on debt owed, which was reached with Intels and was done in the national interest. The authority, while commending the Minister of Transportation, Marine and Blue Economy, Mr. Adeboyega Oyetola, for working tirelessly to ensure that the crisis was resolved, assured stakeholders and Nigerians that revenue generation would now increase as a result of the effort. The authority pointed out that the minister was disheartened by the needless loss of revenue as a result of the stalemate on the pilotage contract, adding that the minister's show of concern underscored his commitment and patriotism towards resolving the protracted dispute. The NPA disclosed that while Nigeria would save a princely $326.89 million from the agreement it reached with Intels on the contentious pilotage contract, the federal government will earn a benefit to the tune of over $500 million, taking into consideration the interest waiver of $193.3 million. The Nigerian Upstream, Petroleum and Regulatory Commission has reviewed the federal government's plan to revoke unused oil exploration leases that companies were granted but have not been able to carry out any exploration activities on them. Latest data from the NUPRC shows that about 53 exploration leases were issued from 2003 to date, but over 60% of the prospecting licenses issued to local and foreign oil firms had expired. Chief Executive Officer of the Commission, Mr. Benga Komolafe, said the Commission will initiate reviews of these leases and awards of new leases will be subject to specific terms and conditions. Mr. Komolafe, however, stated that only companies with viable technical and financial backup will get to keep their leases. And let's take a look at the global equities numbers now. Asian stocks slipped to 3-week lows, and Hong Kong's unloved Hang Seng Index slumped to a 1-year through today, while bonds and the dollar steadied as investors tempered expectations for cuts to U.S. interest rate and waited on U.S. jobs data. MSCI's Products Index of Asia Pacific shares outside Japan was down 1% in late afternoon trade, with Hong Kong doing most of the dragging with a 1.6% fall. The Hang Seng is down more than 17% for the year so far, while world stocks are up almost 15% as investors have streamed out of Chinese assets while the economy stumbles. Japan's Nikkei was 1.4% lower, a 3-week trial, mostly thanks to falling chip-making stocks. S&P 500 futures fell by 0.2% and European futures were flat. Rating agency Moody's cut its outlook on China's government credit rating to negative from stable, citing lower medium-term economic growth and risk from a major correction in the country's vast property sector. The downgrade reflects the growing evidence that authorities will have to provide financial support for debt-laden local governments and state firms, posing broad risk to China's fiscal, economic, and institutional strength, Moody's said in a statement. Moody's said the outlook change has also reflected the increased risk related to structurally and persistently lower medium-term economic growth and the ongoing downsizing of the property sector. While Moody's affirmed China's A1 long-term local and foreign currency issuer ratings, it said it expects the country's annual GDP growth to slow to 4% in 2024 and 2025 and to average about 3.8% from 2026 to 2030. AT&T has chosen Ericsson to build a telecom network using a new cost-cutting technology, O-RAN, that will cover about 70% of its wireless traffic in the United States by late 2026. Ericsson shares rose by 9% and were on track for its best day in years, topping the pan-European stock 600. While Nokia shares fell by 8% to the bottom of the index following AT&T's announcement late yesterday. O-RAN, which means Open Radio Access Network, promises deep cost cuts for telecom operators as it uses cloud-based software and gear from many suppliers instead of relying on proprietary equipment supplied by companies such as Nokia, Ericsson, and Huawei, which do not work with each other. The $14 billion 5-year deal will boost Ericsson's share in one of the largest telecom players in the world and erode the presence of rival Nokia in the North American market. And finally, crude oil prices held steady earlier today amid uncertainty over voluntary output cuts by the OPEC Plus group of the producers, tensions in the Middle East, and weak economic data from the U.S. West Texas Intermediate crude rose to sell at $73.47 per barrel, with an upsurge of 0.59%. Brent crude futures also experienced an uptick of 0.54%, selling at $78.45 per barrel. Bonnie Light recorded a price decline of 3.28% to sell at $78.61 per barrel. And for the OPEC basket, crude oil dealers are offering $82.59 per barrel, with a downward price review of 2.84%.